Good morning, everybody. Today is May 5th, 2021, and we are going to be taking a look at gold, silver, the S&P 500, and I'm going to pop in on Dogecoin because someone was asking about that. Sorry I haven't posted in the last couple of days. I've been extremely busy with a few other work projects, but let's get into the charts. Gold is consolidating near the top. This is bullish in my estimation. I think I can safely say that the channel is no longer valid. So now we're going to be taking a look at a new structure that's formed. Now, we don't have a good structure here. But if we take this structure, we have a decent spot right here that I think is reasonable to assume that we're in a good area. The other thing to note is that we potentially have something like that forming. But I would think it would be like way further out. So I don't actually like that. I do like the look of a little symmetric triangle though. I don't like a triangle on this spot. There's nothing to draw yet. Let's get that opacity down. And let's put this in a yellow consolidation box. So I think this is the area to really pay attention to. We have a lower bound around 1759, 1760 area. We have an upper bound that's kind of trailing around 1795, slowly wicking into the higher 90s. And this is this is really a no trade zone. I mean, this is a flat channel consolidation area for sure. We don't know how long this is going to go on. This blue line is a little bit too premature to place. So we'll see how long we play in this area. We're playing above this yellow line right here, which is the important part. We did back test it, which I did want to see, which is great. And now I think that we are going to be challenging this purple line shortly. We do have a 125 period moving average that is descending quickly, so we need to pay attention to that. Going over to silver, gold I'm bullish on right now, and the RSI is in a good spot. Now let's take a look at silver. Silver's in the same boat as gold. With silver, I have this little bit of play that I get leeway with, which is that I can take it from this area, from the wick on this, and move it across, and we haven't broken structure. So as long as silver stays above this green line and doesn't have any body closes sandwiched in between it, so as long as it's not cutting through the body of any candles, I think this is a good approximation of a bottom to pay attention to. The other thing to note is that silver on the breakout, which happened Friday, I believe. No, Monday. This is Monday's candle. So Monday's move to the upside has set us up, and we've wicked back, but we're holding above this key area right here. This area was key resistance, and now it's acting as support, which is good news. I am expecting silver to backtest this $28 line fairly shortly. We do have 6 more days of upside potentially to go before a 1 to 4 candle correction based on the DeMark system. And silver is very, very bullish on the RSI. This is a really good spot. People say this is double topping. No, not really. To me, this is something that we could either go flat in and consolidate down a little bit closer to this green median line, or we can pop in and start trying to touch the overbought area. S&P 500, we're on a weekly 9 on the S&P 500. The good news is that this S&P 500 candle is completely closing underneath this trend line so far, but we have 2 days and 5 hours left. If we do manage to wick all the way through this and close the entire body above there, I get a little, I'm just going to stay more and more concerned about this. And the steepening angle can be adjusted just like that. It's not much, but if I want to take it from wick to wick, then that would be the angle. And it's not nearly as bad as I was thinking it was going to be, because my previous angle was that. And that's terrifying. So we'll see where this week closes. Hopefully it's closing underneath this trend, and we are kicking back out and not starting this process, which I don't want to see, because the markets are going to get terrifying if that happens. All right, going over to Bitcoin. Now, Bitcoin crashed pretty hard, all the way down to 53 actually. But one of the key things to note, and this is the most important one for me, is that this yellow line that I drew, which in my opinion is the midpoint line to stay above in this widening space that we have, where we have higher upper bounds and higher lower bounds, is being held, and we back tested it perfectly. This is telling me that, and again, here's what happens. The minute, until we get a 1, this 9 count stays intact. And every time that I don't get a 1 on the weekly, I move this up and my target moves up. So now I'm at $98,000. That's how my targets are going. And this is moving up with it, because this is what I want to see as the structure that closes out this candle. That's the structure I want to see that closes out the 9 candle, which is a complete, a huge reversal weekly candle that's bearish as all hell and tells us that we need 9 weeks of downside, that we need a huge correction. And what I'm going to be expecting is to be backtesting one of these moving averages. It's either going to be the 50, the 125, and I don't think it's going to be the 200 week. I think if we are backtesting the 200-week moving average, that's a little too steep for me. Maybe the 125, because the 125 is going to be starting to fly up faster and faster. If we only get to the 50, the 50 could be in line with this trend line by then, and then that's the spot I would be looking to buy the dip at. So let's see here. That's 9 bars. That puts us into July, middle of July. Okay, so 1, 2, 3, 4. I think next week's candle is for sure going to be a 1. 1, 2, 3, 4. This week's candle, in order to be a 1, needs to be all the way above here. So this is actually gone. We need to be above 60,000 in order to close this as a 1. If we close this as a 1, if we close this candle as a 1, then I'm looking for a $95,000 area based on this trend line as a back test. Now that doesn't mean that we can't back test it sooner, and if we do that, that's where I'll take some profit, and then I'll look for a spot to buy the dip down on back here at this line. And then if we do something like do, that's fine by me. I don't have a problem with that. I think that's a reasonable thing to expect, is, you know, a huge pump into the 70s, a crash back down into the 60s, and then a huge pump into the 90s, followed by a bigger correction down into the 40s. All right, let's take a look at Doge. Oh yeah, and if you guys were following me on the Litecoin deal, and you took some trades and you had some nice entry positions, you guys just hopefully are clearly in profit right now, and this is playing out just like I thought. So hopefully this is what we're about to see. I think that that's starting to show up, at least if not something like this. So this is my peak estimate, is a 700% move, and this is my kind of more conservative estimate, which is a 180% move. Both of which I find very enjoyable. This could be the move, but I highly doubt it. So actually, there's 3 options. There's the, well, That's not as bad as I thought it was. Nope, this is the move. 659, yeah. This is the move, and then this is the other one that I'm looking at. So we'll see how we go. I am looking at this area as a potential top. But let me pull up Doge. Not Doge. Whatever the hell that would be. Let's just look at the dollar count. So where's the dollar at? So, ooh, Doge is looking interesting. We do have some RSI divergence, clearly, right here. However, that could change any second as soon as this this new upswing takes out the high on this RSI at 93. And then, I mean, Doge potentially has one more week of upside from here. Like, we're on an 8 of 9, so I would be looking at maybe next week to take profit. However, it depends on where this 8 candle closes. I mean, if this 8 candle starts trading below the midpoints of the wick, I think I would be more than willing to take it. So 85% move, that would be 42.5. So I would sit there and think maybe 53.1 is the area. So 53 cents, 0.531 is the area that I would be looking at very seriously, saying, okay, if we start trading below that, I'm out. That's where I would exit my position. If we hold above here, then immediately my stop loss would go right there. So either I get liquidated right here, or we hold through it. And if we hold through it, then my stop loss is going to hold. And then when if the 9 candle starts trading above the midpoint of the 8, my stop loss starts going up. I think he may have just gotten hit. Yeah, just got hit there. So yeah, you're out of the market. Okay, yeah, look. So going to the 1 hour, you're already seeing it pull back. I mean, this 2 going below this 1 at 63 cents, that's a clear sign to be out of the market. You did have a 9 right here that, well, it never turned into a 9, but that was your profit-taking area. And I mean, if you were out here, and yeah, there was no entry on the one, there's no bullish entry if you took profit on this candle. Like, if you took profit anywhere here, like just said, okay, you know what, if you get above the we'll take midpoint profit right here. Or if you're down here, if you hit the midpoint, take your profit out, and then it's like, or set your stop loss accordingly right here. And then there's just no entry. You get a green 1, okay, and then you see this green 2, and it doesn't trade above a green 1. And you have a green 1 again, but it never realizes into a green 2 going above a green 1, and you're out of the market. So the hourly chart called this very, very nicely. The 4 hour did not do a good job. The daily, the dailies. I like this rule. 9s are where you take profit. So, I mean, it's a hard call to say if you would have gotten out right here. But, you know, my stop loss on my 9 would have been, okay, we're right here, 50%, so go to 25. And my stop loss on my 9 would be right here. So you wouldn't even hit my stop loss yet, even though it tells me to be out of the market. The other thing is that as soon as this one candle started trading again, my stop loss would have gone all the way up here as soon as it cleared the distance. So as soon as it cleared about up to here, my stop loss would have gone right here at 59. So I would have been out of this market either way. But I mean, this is a blow off top candle on the daily. It's not looking good. I'm a little more bearish on Doge, but Doge is getting listed on a bunch of exchanges and getting more exposure to the public. And the public is just stupid enough to just go buy a bunch of Doge, thinking they're going to get rich quick. Even though the place to get rich quick was back here when Doge was less than a quarter of a penny. So I mean 1, 2, 3, 4, and 5. I mean you could call this the end of an Elliott wave cycle right here as this move up. But I don't know. This market is not rash. There's no rhyme or reason to this. Doge can go anywhere. My best estimation would be that I would be out of here taking profit. And I've already taken profit. I took my profit down here and was out. And I didn't buy back in, obviously, because it was a joke that I put some money into, and it just happened to net me, a nice percentage gain. But yeah, I'm more hesitant than anything to trade this asset. It's tradable for sure, but you don't know when some big player who has like 10 or 20 million Doge coins, or even even larger amounts than that, is just going to sit there and start going onto the exchanges and liquidating their positions. They'll wipe out the order books real fast. So be tight with your stop losses, and be careful about Doge. It's bullish, that's for sure. All right, but it may be turning around. That's enough for today, everyone. I hope everyone has a wonderful Cinco de Mayo, and don't drink too much, and have a happy celebration. Alrighty, bye.